Hi, I'm David Magee with DB Magee & Company. We're a middle market business brokerage headquartered here in Chapel Hill, North Carolina. Today we're talking profitability measures, net income, cash flow, return on assets, and free cash flow, all metrics you should understand and consider when evaluating a business. In this piece we're discussing metric 1, net income. For me, everything is more understandable if put into pictures, so here we go. Net income is reflected on the income statement. As a short review, the income statement captures income for a specified accounting period, whether that be a month, a quarter, or a year. When we say income, that includes both operating income, the income we generate from customers, and non-operating income, like gains or losses on investments. The income statement also captures the expenses incurred over the same period. If we include everything, cost of goods sold, general and administrative expense, research and development, sales expense, depreciation and amortization, interest expense, and tax expense, then the difference between income and all of these expenses is net income, our first profit measure. You should know that net income has a number of aliases. You'll hear it called net earnings, net profit, and sometimes more generally as the bottom line. While we're here, and just for kicks, if you were to add back tax expense, the difference between income and expenses would be earnings before taxes, or EBT. If we added back interest expense as well, the difference would be earnings before interest and taxes, or EBIT. If we also added back depreciation and amortization, the difference would be earnings before interest, tax, depreciation, and amortization, or EBITDA. Finally, if we added back research and development along with sales and general and administrative expense, leaving only cost of goods sold, we'd have gross profit. But I digress. So back to net income. What does net income tell us about a company? Basically, it tells us whether the company is currently operating at a profit or at a loss. If there's net income, the company is generating more revenue than it's spending running the business. That's a good thing, obviously, since it allows the company to compensate its owners, pay its obligations, and accumulate more assets. If the company has a net loss, we look to further understand why. We also want to know whether it's a one-time occurrence or whether it's an ongoing trend. That's net income, our first profitability measure. Next up, cash flow. And remember, if you're contemplating buying or selling a business, give us a call.